Today is May 25th, 2026. It is 10:16 a.m. Pacific time as I am recording the video. And energy had tried to break out here off the crude oil West Texas Intermediate Futures daily chart. And it is now testing whether the geopolitical premium was real here. And it is undercutting a primary ascending uptrend price support level in confluence of its 50-day moving average taken out. Call it the 1.618 9305 price support level, and that is being taken out here, testing daily solid infused red candle close down below. And this is the heartbeat of inflation, freight, airlines, trucking, diesel, war risks, refinery margins, and this entire shadow tax that energy places on the global consumer. And right now, crude is at a very peculiar, major, key, pivotal inflection point. And once WTI had that monster breakout, it put in a nice, clean, big-time divergent high with negative and bearish divergences constructed on all key technical momentum indicators. And you had that first initial breakdown sell signal off this bearish rising wedge setup, followed by a stream of consolidation. And now we are beginning to test a very key primary ascending uptrend price support level. So now the chart is no longer a clean, it is no longer in a clean breakout mode. Now it's in a full-blown decision mode. And I believe the 1.618 fib extension level is huge here. This was such a big level in confluence of multiple key technical ascension points. And that means the $93 handle is no longer just a target. It is now the battlefield in between some of these key extension zones. And if WTI holds around the 90 to 93 range, it could still be fairly bullish. But if it completely undercuts these levels, you could have a massive impulse move to the downside, reflecting down below its 200-day moving average, its 1 fib retracement level at the $78 handle, and then ultimately its 786 fib at the 72 handle. If it ultimately loses this zone completely, then this chart looks more like a failed breakout from a full-blown geopolitical spike. Either WTI West Texas Intermediate needs to stop bleeding right here or right now, or the chart starts opening up its trap doors. And for me, Brent looks even weaker. And that matters here as the global shipping crude energy here, and it is trading near the 94 handle, ultimately breaking down below its ascending primary price support level. Put in a nice clean divergent high. You had a ascending triangle wedge pattern. You had your first initial breakdown sell signal with the back test, and you had ultimately failed to recoup the gap price resistance level called the 109.94 price zone. And it is starting to backtest and break down from this key inflection point. And once again, WTI is closing in on this 1618 fib retracement level. But Brent looks like it already lost some of its structural support here. And that could be the early tell signal for WTI and what's to come. And near the 109 handle that had been taking out that price support level, energy bulls tried to sustain that crisis premium up here, but the buyers could not keep paying for prices upward until some of those geopolitical catalysts and the headlines were beginning to print. But make no mistake about it, via the pure technicals, this was a big divergence between WTI and Brent, and that's where things get exceedingly important. Where WTI looks like it's still trying to hold out its breakout structure, but Brent is already breaking down at a quicker velocity and pace, and that can only mean a few things. Either the global seaborne crude premium is cooling, meaning that the market is no longer pricing an immediate choke point disaster, or U.S. crude is being supported more locally while Brent is losing the global panic premium bid. So the market is saying the war risk premium spread in between WTI and Brent was overbid, and now traders are fading the fear trade. And if Brent is the global oil benchmark, and if Brent is weaker, then that is usually a warning that the global risk premium is starting to leak down as well. And while the WTI is cooling, while the WTI RSI is cooling, momentum is fading, but it is not within deep oversold levels yet. which is confirming that there's no longer strength within these key technical indicators. Whereas Stochastics custom 1033 gauge is already near the bottom around the 1030 zone, meaning that the short-term downside momentum is overstretched. And that could potentially create a bounce here with a counter-trend snapback rally, ultimately backtesting where short sellers will begin piling in on a second wave of selling and or add-on. But what I see from here is a failed breakout, a trendline break, and momentum completely rolling over here, where the war premium could undoubtedly unwind. And oil is where the empire's story continues to build here. Politicians can talk about soft landings, some of their green transitions or strategic reserves, or some of the Iranian sanctions. But oil and the black gold markets do not care about any of these speeches or headlines. Oil and the energy markets only care about ships, the barrels, the pipelines, the refineries, and some of the cracks within the diesel distillate markets, and ultimately the choke points and insurance, and whether somebody can physically move the molecule from one side of the planet to the other. And right now, the chart is asking one brutal question. Was the market pricing a real supply shock or just a temporary panic bid? And if it is a panic bid, and all of this was sustained off of an oil slack in a massive glut in supply, watch out as energy bulls fade the trade and ultimately rush towards the emergency exits.